Hey guys, how's it going? We are live today. First time I'm doing a live video here for my Monday market update. So welcome. I'm not sure if YouTube notified everyone. So, if no one joins the live, I'm just going to post it like a normal recording and we'll roll with the punches. But if you're here, comment, let me know that you're here, and I can interact with you guys along the way on this week's update. So thanks for joining me. If you're new here, I'm CaitlinMcKeague. I am a real estate broker here in Phoenix, Arizona, and I am giving a market update every Monday on what's going on in Phoenix real estate. So let's jump into everything that we've got going on and see. Let's start with the larger stuff like inflation, which is what I've been talking about every single week, and how that is affecting the market here in Phoenix, interest rates, and all of that stuff. Hi, Jason. Thank you for joining. I'm so glad this worked. I was like, I don't know if anyone's going to join. I don't know if this is going to work. So thanks for joining. Thanks for saying you're here. All right, let's take this off, and I'm going to share my screen here and get into the info. Okay. So we're going to start with talking about inflation. Inflation is slowing, August CPI to show, but not enough to mollify the worried Fed. So tomorrow the CPI numbers are going to come out. There are some anticipations on where those are going to land. They're thinking that consumer prices declined by 0.1% in August. So there's some predictions out there that this is going to be a little bit like a positive, a little bit of a decrease on the CPI numbers, but we all know the Fed is still intent on raising the federal funds rate. So I don't think it is going to make much of a difference unless we see some insane change that no one expected. This other article here talking about this is a bit more specific that I wanted to share. So they are thinking it will show a 0.1% monthly decline thanks to falling gas prices. And one of the things that is affecting this the most this time is because we've finally seen a decline in gas prices. So that would bring the CPI inflation rate down to 8% from 8.5%, but the outlook for the Fed and Dow Jones hinges on what happens with core inflation, which excludes the volatile food and energy prices. So the core CPI is expected to rise 0.3% on the month, lifting the annual core inflation rate to 6.1% from 5.9%. A softer than expected reading would reduce the odds that the Fed will do another 75 basis point hike. But right now, markets are pricing in about 92% odds that they're going to be doing that. So I'll be shocked if they go away from their 75 basis point hike this time. They've also said that the next hike or next meeting after that, they would also do 75. So I think, maybe that could be affected if these numbers are better, but maybe not. I don't know. So we'll see. But at least for this next meeting, I think it's going to be 75. And so we're already starting to see that mortgage rates are being affected by this. They're pricing in these hikes already because for the last 3 weeks, mortgage rates have increased. So I'm going to jump over to a different document here because I want to show you guys a few different graphs. And I actually was able to join an update from the Cromford report today. And so I have some super updated information, snagged a few graphs from there. So mortgage rates, like I said, the last 3 weeks, rates have been going up, which is not great for the real estate market because it starts to send our number of buyers to the sidelines. And then that doesn't allow us to get a lot of contracts, and sellers are sitting there wondering where all the offers are, et cetera, et cetera. So we're starting to see an uptick again. You can see back in June, we came down and then spiked a little bit and then back down. We even got to 4.99%. And then we've started to climb up and seen a steady increase. And when this section here happened, we definitely saw a big stop in contracts and real estate activity. And so now we're starting to look similar to what happened back in June. Not sure if we're going to have the same type of reaction this time around because we are in a busier season. Typically the fall is a little bit busier for Phoenix real estate. but we're definitely seeing this spike. So we may be on the cusp of some slower activity considering where mortgage rates are and then the news from the Fed. I'd be not surprised if those kinds of things, if we start to see that slowing down. So moving on, let's talk about the Cromford data. I know all of you are always so interested in that. We have some rental data this week, and I know a lot of you love to know about rental data. So rentals are everywhere right now. We have a huge increase in rental listings. It's up 119% since September of last year. And we're at about 2,900 rental listings out there in the MLS. That's just the MLS. And landlords don't like to list their homes or their rentals in MLS because it costs them money. And typically they can get a tenant using Zillow or apartments.com or whatever. So they don't like to use this unless they absolutely have to, which is clearly showing that landlords are having a hard time getting tenants. Now that's interesting, right? Because we have, all these high interest rates. So you would think people need a place to live. So if they're not going to buy, they're going to rent. But for whatever reason, we have a lot of rentals on the market and not a whole lot of tenants. And so some stats about that, we just recorded the largest ever year-over-year percentage increase in the rate of new rental listings. There were 3,449 active rental listings, excluding short-term rentals, yesterday. This is up 149% from the same date last year and up 15% from a month ago. So big gains on the rental listing front. And then I thought it was interesting, the breakout here. So single family rentals make up 74% of what's out there. Last year, that was only 65%. And in 2020, single family homes were only 43%. So not entirely sure why. My guess is that we've had a higher investor concentration over the last 2 years since COVID. And many of them probably purchased for Airbnb purpose. Maybe they weren't successful at that and they're turning them into long-term rentals. Most people, if they're going to do Airbnb, they try to get a single family home outside of an HOA. So I don't know, that's just my guess, could be completely wrong, but those are my thoughts on why we have a larger mix. Not really sure, but thought that was interesting. So obviously having a surplus of rental listings is going to hurt rental prices. So we now have a big difference between the listed prices and the actual closed rental prices. So 2,300 to 2,200, pretty big difference. And you can see how close this was leading up, split up a little bit, went back and forth, but now it's pretty consistent that closed rentals are actually going to be lower than what they're listed for. So, oh yay, we got another person. Hi, Jane. Thanks for joining. I'm so glad I'm actually out there broadcasting. And you know what I thought, you guys? I was like, this is the first day of Monday Night Football. What a great day and time to start a live feed. So thanks for joining, guys. I'm glad you're here. So anyway, rental rates. I don't know if this is going to continue to go down, but obviously we do have a difference now between what you can list for and what you can actually rent for. So something to keep in mind. Hi, Terry. Thanks for joining. Let's go down a little bit more here. We're going to talk about the Cromford Market Index. Now, if you're new here, I'll just briefly explain this. This is the Cromford report that I follow. They are a wonderful company that does a lot of data research on the MLS. And so they have this market index. Anything between 90 to 110 is a balanced market. Anything more than 110 is a seller's market. And anything below 90 is a buyer's market. And so this helps us understand supply and demand in the market. So if we look here, we're at 105.4, and this is really not much different than last week. If you guys have been following this, we are definitely gliding, and I'm going to show you a graph with that in a second. But 105.4, not much of a change. and we had been seeing some big changes with this. So we're clearly in balance. Remember, 90 to 110 is a balanced market. The greater Phoenix area is in balance. And then when we look at demand, I don't know if you're noticing this, but this went up, you guys. 80.4. We were at 79 point something last week. So a small uptick, but it's up. So we can use a little bit more demand in this market right now. So that's good news to see that we're at 80.4 for demand, which is essentially about 20% below normal if we say that 100 is normal. Okay, so then our supply also below normal, but this has been increasing quite a bit, 76.3. And so being that supply is very close to demand and those numbers are close to matching, that means we're in a balanced market. Supply has not been increasing that much though. We had a pretty crazy summer with a lot of new listings hitting the market. That slowed down significantly. Now we're just kind of in a normal space with new listings coming to the market and listings staying on the market a little bit longer. So our supply is larger, but as far as like new listings coming on, we're not seeing that flood that we were before. So that's kind of why we're stabilizing. Our demand's kind of stable, our supply is stable. There's not a whole lot of changes. You can also see, I want to point this out here for the demand trend. You can see this has been trending upward. So although we're not seeing like big number changes here, this is by, I think this is by day. And so you can start to see how that's been trending upwards on the demand side. But, you know, again, with these interest rates going up for the past 3 weeks, that may top off or start to go down. We'll have to keep an eye on that. So that's where we're at with the overall CMI today. Here's the visual. Like I said, we're gliding, we're chilling, no crazy drop. This felt like a crazy drop, but I think we've arrived. Now, whether or not we're going to stay here for a long time, you know, I don't know, but that's where we are right now. Let's see, what is this question? Are we seeing less houses being sold month to month? Yes, our number of contracts are much lower than they typically are for this time of year. And compared year over year, I don't have those numbers in front of me right now, but we are seeing much fewer homes, and that's because we have lower demand. So we're just not getting as many homes sold on a month over month basis. I think June, I want to say June was possibly the worst, June or July. And then we had a decent month in August, but still very low. So too new into September to know how we'll shake out. But that's where we're at with sales. All right, Terry, can a rock glide? LOL. I don't know. We'll see. For now, we're gliding. Maybe the rock has wings or something. Okay, let's move on. So this is cool. I snapshotted this today from the Cromford update I was on, and I love how they have this broken down between seller markets, balanced markets, weak buyer markets, and strong buyer markets. So you can see your city in here and see where you stand. I always, kind of talk about the numbers, but this color coding makes it much, much easier to see. So we've got 4 really strong cities: Paradise Valley, Fountain Hills, Scottsdale, Cave Creek. All of those are in a seller's market. All of them are also in the Northeast Valley. The balanced markets, a pretty broad chunk of everything there. And then we have a weak buyer's market section, and then our strong buyer's market section. So for all of these, depending on if you're a seller, if you're a buyer, this might help you understand where to target. But here is the big change that we have this week. You see these green arrows? There's not only one, but there are 2 green arrows this week. So Chandler actually improved for sellers in the last week. And actually, this is looking month over month. So month over month, Chandler improved, as well as Paradise Valley, which has been that way for a while. So that's what we've got for the various cities. And then a little bit more of a breakdown here. So the average monthly change in the CMI was 9%. Guys, I remember when I was saying, I think 32% at one point. So it's down to 9%. The week before, the reading was 15%. The average decline over the last week was only 0.2%. If we focus on the change in CMI over just the past week, more cities edged higher. So like I said, we're looking at the change over the last month for most of these, but if we just look at the recent ones, we've got Chandler, Paradise Valley, Scottsdale, Tempe, Gilbert, Phoenix, Glendale, Mesa, all up. Those all improved for sellers over the last week. So Yes, outskirts cities. The outskirts cities also have a lot of new construction going on. So their supply is much larger than their demand in those cities. In combination with a few other things, they're not always the most popular areas or populated. A few different reasons for that, but they do have a lot more supply because of the new construction. So the worst areas for the falling CMI over the last week was Goodyear, Fountain Hills, Cave Creek, Avondale, Surprise, Buckeye, and Maricopa. I find it interesting that Fountain Hills and Cave Creek are on this list because those are two of the strongest sellers markets. So they have started to deteriorate over the last week, while a lot more have been improving. So we'll have to keep an eye on those and see if anything changes significantly. But overall, this is where we're at with the CMI this week and the various cities. So you guys, that is all I have for you today. I appreciate you joining me on this first Monday Night Football and coming in anyway, joining the live. I plan to do this live every Monday as long as my schedule allows, keeping it at 4 p.m. as usual, but being live so that I can actually chat with all of you and interact. So, and then of course the recording will stay on the channel, so you can always reference that back. And if there's anything I can help you with, you know where to reach me. All my info will be in the description. So thanks guys for joining, and have a great rest of your week. And I will be back on Friday with another video. Bye.